Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday, 29th of September. It's a fairly cautious look to markets today. Little interesting sort of split really in market risk appetite, because what we've seen is equity markets falling away. Early morning today, we've seen S&P futures coming back, tracking back below into negative territory, European markets falling away. But the dollar is also under a little bit of pressure. Actually, dollar's falling against all majors apart from the yen, which would suggest ultimately risk positive, wouldn't it? But anyway, that's a little bit of a split that we have between Forex and equities today. We've seen that recent days that markets have been responding to the improved prospects of a fiscal support package in Congress. And that has helped to see markets just picking up in terms of risk appetite, and you've just started to see the dollar rolling over slightly, and that sort of pulls into question the prospect of the dollar recovery, which would, I think, be really questioned if there were to be a ratification of a fiscal support package in Congress. So watch 93.50 to 94 figure on the dollar for that. And you can see here that equity markets have picked up quite sharply on the back of that. But as the dollar, even though the dollar is under a little bit of corrective pressure today, S&P futures have just rolled off the top. So that's an interesting bit of caution to take through equity markets today. Now, in terms of data points today, you've got into the afternoon, you've got a bit of German inflation, US trade and US consumer confidence. German inflation expected to fall actually into negative territory. So deflation on the year-on-year HICP again. So that would not necessarily bode well for Eurozone inflation tomorrow. US advanced trade balance is expected to show a widening of the trade balance, or trade deficit, I should say, to 81.8 billion, although it's not shown here on Reuters. And then the really important one this afternoon, consumer confidence, actually expected to pick up to 89.5. And I'll show you why this is tends to be seen as an important figure. Look at that. That's a chart to strike the fear into any equity market bulls, if ever there was one, I think. But as long as if consumer confidence can quickly pick back up again, maybe it's not going to be such an impact as that potentially could be. But interesting chart nonetheless, I think. So the big factors to look out for today, actually Fed speakers. Across the board, we've got a load of them. John Williams, Patrick Harker, Richard Clarida and Randall Quarles. And the presidential debates kick off tonight. The first one between Trump and Biden, and how the two candidates come out on that debate could well have an impact again on the dollar. So that could be why the dollar is also sort of coming back a little bit of under pressure. So just watch out for that, I think. But yeah, some interesting divergences between Forex and equities today. Now, my chart today is the dollar Canadian. Now, dollar Canadian has been on this recovery, as the dollar has been recovering in the last few weeks. You can see that through dollar Canadian actually completing a small base pattern through that resistance of 32.30 up to 32.60 neckline there, the blue dotted line. But the more important resistance would have been the 33 area, 133 big figure. Now, if you come back here, you can see this, how often that sort of is a basis of a pivot. Not to the pip, I might add, but certainly is a long time, for a long time, has been seen as a sort of a pivot line. And breaking above that is positive, obviously, wouldn't it be? So holding on to that on a retreat as the dollar just suffers a little bit in the last couple of days. Interesting move. Is this going to be seen as a chance to buy? US dollar index, as I said, 93.50 to 94 figure is supportive, and 33 big figure on 133 big figure on dollar CAD there or thereabouts is also that equates to that support. So watch out for that, I think. You've seen a little rolling over on these momentum indicators, but essentially they're still positively configured and would suggest buying into weakness. So again, is this an opportunity? Hourly chart a little bit less positive than the daily, but as I said, 33 big figure area, 3310 on that line, which is that low there from June. 3310 area is supportive. So a nice band of support between 3230 to 33 big figure area, in line with this uptrend, in line with the 21-day moving average, which is the basis of old resistance now turned support, would suggest buying into the weakness. So we'll see how this one plays out, but that is certainly the technicals are suggesting that. So yeah, so with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and click to watch Trader Talks, our videos that give you top trading ideas.